Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the Tuesday strategy session. Today, we've got liquidity providers back in the office, and that's a big deal. That's great for us because we get that added liquidity. We get all that market depth, tight spreads, lots of volatility. Full disclosure, today's been a tricky session. There's a lot going on in the news cycle. We're reading things about delayed tariffs now. We're talking about executive orders from the Trump administration. This has been a real rocky road on the markets, even though we're up in the Dow. We're looking at about 445 points in the Dow. Crude oil took a big spill, got us involved in our trade idea from yesterday, and it went up and hit the profit target. This is going to be one of those where it sort of depends on who your broker is, whether you got filled up there or not, because we sort of hit it right on the nose with our one-to-one. But the trade is still theoretically active for a larger position. But to be honest with you, it was a good for 70 pips to the top side. I don't think I would be hanging around looking for much more. Why? Because the news is going to start breaking fast and furious about the U.S. oil industry, and I think that that's going to be a major bearish market driver here for U.S. oil. So I don't really want to be holding longs. That being said, we did have a pretty darn good buy there from 75.59 that I really liked. So we're going to go ahead and we're going to take a good look at that, break that down. We've also got a trade live right now on the Kiwi CAD, and it's right around break even. We're down about 5 pips there, so I'm looking for maybe a bigger move to the top side. So we're going to unpack those trades, and then we're going to do a 9 EMA trade that I'm sort of stalking here, stalking the E-mini Dow futures on the 5-minute chart with our 920 crossover, but I'm just going to bring that down to a 9 EMA, and then we're going to start looking at some of our favorite Forex pairs on a 4-hour time frame and maybe build a swing trade for the rest of the week. If you guys have any markets that you want to look at, be sure to enter them in the chat in live in YouTube land or right here in the trading room, and I'll be more than happy to throw them up, pull up a chart, and strategize. That's what it's all about. So good to see everybody back. Team Marina, always a pleasure. Good afternoon, good morning, good evening, good afternoon, wherever you may be. Bobby Bob, always a pleasure, Bobby. Mark Corp, good to see you, Mark Corp. All right, guys. Lots of folks are getting chopped to death today. They really are, and there's a lot of reasons why. Even though the markets are up, the Dow rallies 400 points. I'm not really buying it just because it really is just sort of a reaction to the news cycle. And remember, we don't trade the headlines. You don't trade headlines, especially if they're on CNBC, because God only knows who wrote them and who knows what they're thinking about. So remember, these are designed to get clicks, and we're talking tariffs day one. I sort of figured this was coming. I probably should have talked about it yesterday, but we talked about enough. In any case, here are the products and companies most at risk from Trump's tariff plans. Trump's tariff two-step is back, and Wall Street is bracing itself. Trade war has no winners. China. Okay, so what is the big deal here? Tariffs, uncertainty. We don't really know what's going to happen or when these orders are going to come down, and that's going to shake the markets up. So right now, we're sort of in a state of flux. If you're doing okay for January, then that's fantastic. If you're losing a little bit in January, I understand. This has been a challenging couple of weeks, especially beginning, I would say, right after CPI last week. The markets have been pretty raucous. I haven't seen a whole heck of a lot in there that I really am enjoying at the moment. We're just going to have to sort of weather this storm right away. However, our trading signals are doing pretty well. They're not signals, they're trade ideas. We're doing pretty well in that regard. I would say that the most predictable market out there right now is the Forex, just because the dollar is showing some definite strength. Our commodities are sort of all over the place, and that really can spell big-time trouble for commodities traders like gold, We saw gold break out today, but did it break out? It sort of fizzled. I warned everybody about buying that long over December's high, so I hope you didn't get sucked into that. Very, very tight action on the futures market. Okay, let's get right out to price action. You can see this is a good look at our 920 EMA strategy. We're going to have a video out this coming week, this coming Friday. It's going to show you how to code the 920 EMA with ChatGPT. I put a lot into it. It's going to give you a real good baseline, at least on TradingView, and if there's enough demand, then I'll go ahead and do one for MT5 as well. But we use ChatGPT to give us a good look at that 920 EMA. We shaded the distance between the EMAs. That's important because the wider that distance is, the stronger your trend is. Extremely useful tool for, say, a 1-minute chart. And then we also just gave basic buy and sell signals. We coded them in, so automatically you'll have a gold signal. You'll have a gold bar on a buy, first positive close after a crossover, you're going to have a buy, and first negative close after a crossover, you're going to have a sell. So after coding it, you're going to be able to look at the chart and say, okay, well, the trend is either strong or weak, and I'm either on a buy or a sell. Relatively simple. So we hope you enjoy that one. Also, a lot of you watched the orb video, the opening range breakout strategy. We'll take a look at that here in a second on the 30-minute chart using the YM contract, the E-mini Dow. In any case, the Dow's up big today. That's the reason why I chose this one. You'll see in our RSI, or relative strength index, we're definitely overbought. So we're looking for maybe a late day sell, but in order to get that, you're going to need to get the 9 to cross over the 20 and then get a negative bar close. This is a 5-minute chart. I think it's a pretty good duration to use here. The market, even though it's up big, it's slow. It's slow and it's choppy and it's ugly, and I don't particularly care for it. So I'm watching it relatively closely. Our opening range breakout strategy was something that we talked about on that video. A lot of you got a lot of thumbs up, and I was really happy that it was well received. It's something that I use in my own trading, and my opening ranges are always incredibly important to me, especially when it comes to the U.S. equities indices, and I love the 30-minute chart. Absolutely, the 30-minute chart is exactly how I build my early day trades. So what we have here is you've got sort of your opening 30 minutes, ding, ding, volumes back. And then what do you have? You have a real compressed B period, what we would call a B period. It would be a C period for commodities. For equities, it's going to be a B period. And so you've got A period, A up, B rotation, and then C breaks, D breaks, and now we're just sort of messing around in a bullish fashion. How would I want to trade this? Well, if we were going to go ahead and trade that breakout strategy, you'd be playing above this break, above the A period break, which meant that you would probably be looking to bid right up here. So you would have bid relatively, the top of the market, and you would have got a nice little rally right there. So you're in the money as far as it goes right now. But your stop loss, one of the great things I love about the 2-bar strategy, the basic 2-bar range, opening range strategy, is that you can play it really tight. Now, this is a 30-minute, so the risk is relatively big, but take a look. You just put your stop loss beneath that price bar, and you've got a nice anchor point to get you out of the market. The other way that you can execute is put your stop loss beneath the entire thing. I don't know. That's a bit ambitious, I think, especially if you got a huge A period like we did today, which was about 135 points or 0.31%. So the trade was relatively simple to execute. You're long from up here. You haven't really got the big payoff, but we don't really have any topside resistance. Macro topside resistance, if you wanted to pull, say, a weekly chart, this is the chart that I'm looking at right now for resistance zones and something like that. You really don't have much topside resistance up there till 44,240, which is about another 80 points. So I'll be looking to take a sell, late day sell from there, and I would absolutely love it if this 5-minute chart, this 5-minute 920, would line up just perfect. If we get that to line up with my top side resistance up around 44,240, then that's an auto sell. We take the position and we just wait to see if we nail a top, and I think we've got a pretty good chance of nailing a top there. So let's see. Okay, I got a question for the Euro Swissy. I will definitely cover the Euro Swissy. We got a few other markets that I want to hit because there have been some major developments in the gold market that we need to look at, and we also got to recap our trades real quick, and then we'll get on with the show. But right there, that's sort of what we're looking at with the 9. That's a basic 920. Now remember, if in fact you were looking at a 9 EMA here, it's relatively easy. You just turn off your 20 EMA, and what would that mean, say, on a 5-minute chart? An overbought territory. What were we looking for? A negative close beneath the 9. Basically, we'd be looking to sell. So let's go right here. Paper trading. Let's connect it. I have no idea what that is. What is that? Rock on. I got a million different things rolling on this computer, so if we get a little sound, that's okay. In any case, if we were just rocking a basic 9 EMA strategy, you've got sort of an overbought territory there. You'd be on a sell. That would have been your sell down here. So theoretically, if you wanted to sell right now, you could, just because the mechanics of the trade are basically the same. Let's go ahead and let's go with a 4 lot. This is only $5 a point. So let's go ahead and we go ahead. So we sold the market right there. Where would my stop loss have to be? Right up above that top, that market top. It looks to me like you could be in a little bit of trouble here, but it's not the biggest risk in the world. Remember, one of the benefits of trading, say a 5-minute or a 1-minute chart, is that your risks aren't big, but you're going to have a lot of trades. So you've got to be taking those trades all the time. You don't really want to miss trades, because if you miss them, you miss the big mover and shaker, something like this, where back early in the session, well, actually that's during the overnight, we didn't quite get into oversold territory, so we didn't get a buy. We didn't get to buy on that. But definitely something up here, if you're looking to sell on that 9 EMA, still valid. That would have been your first sell signal of the day. Will it work? Won't it work? Well, you're sort of in the midst of a sweep higher. Right now, we're in a little bit of trouble, it looks like. We'll wait and see. Let that simmer. Just remember where our stop loss is going to be. The high right up there is going to be 44,189. So I'm going to go ahead and stop myself out. Let's say about 92, somewhere in there. If, in fact, we can get this stop limit to work. Let me see. Yeah, we'll buy it. We'll buy 4 right back there on the stop. So that'll be our stop loss order. And that's a trading dome, depth of market, if you're not used to using those in your live trading. Okay, let's see. Let's get right out to a couple of our trade ideas and do some recapping. We'll let that one simmer. We're up a few bucks. We'll just wait and see if we caught the top or didn't. Let me see. Evening from Nigeria. Good to see you, Emmanuel. Welcome. Good evening, good day, good morning, wherever you may be. Still early in the day for me, and it looks like we're going to get stopped out here, and that's part of life, using a real short time frame EMA strategy. You just got to go with it. Take a lot of trades and win a lot of them. Let me see. T. Marina, Shane, which 9 EMA strategy is your go-to and why? And for which market, if any? I like the simplicity of the 9 EMA, just the 9 EMA with RSI confirmation. I really do like that, but the way that we executed that trade right there is similar to what I like to do. I don't necessarily like to get in on that first big, like in this case, that first big negative candle, that opening entry. I don't really like that, because more times than not, especially on short time frames, you see significant pullbacks right to your 9 EMA. So I always sort of wait, because my entries typically get a little bit better in, say, a minute or two, really, and then you look to just get in. The big thing for me, the most important part about the EMA or the 920 or the 5813, which I really like as well, all of those strategies, the single most important thing about them, sure, they give you entry points into the market, but they also give you stop out points. And by far, the most important thing that you'll ever do in active trading is understand where you have to get out of the market. And if you have a stop out point on your trade, then you're going to be successful over the long term. Then it's just a matter of measuring how big the moves are and understanding how long you need to stay in the market, aligning your risk to reward. This right here gave us a stop out. You can see we're up a few bucks on the trade. It ain't exactly the greatest trade in the world, but it's coming. The market's coming our way a little bit. Maybe we get a little bit of a downturn. So where would my profit target be? Let's just shoot for a 1-to-1 or something simple like that. I mean, we could already take 280, 320 off of it, but if we went at 191 and we sold at 172, so that's 19 ticks. So we should be down there probably around 53. No, not 53. Somewhere, well, that would have been our sell, right? So 91 minus 172 is 19. So 19 would be 53, and that would be our trade. So right there would be the buyback. 53. We already hit it. Let's see if we get filled up. Yeah, we went to 52. If we wanted to go a little bit bigger trade, we could go another 19 ticks down there, which would take us to what? About 34, somewhere in there, I believe. So that would be sort of your position trade, something like that, going from 53 to 34. That would be how you would manage it. So let's wait and see what happens. Personally, I like taking the money off the board when it's there, especially when it's easy. But we'll just let it play out and see exactly how this thing goes. I'd say it's a 50-50 trade, whether it hits the 1-to-2 right now. We just hit 1-to-1, so you could have easily racked some money. PM, good to see you, PM. So that would be my answer, T. Marine. I like the 9 EMA with the RSI, but honestly, the 920 works. The 920 is superior in a lot of ways. This on short time frames will get you in and out of the market a lot. And typically that's what most people want to do. So I think it can be useful. And if you understand market state and the broader picture of what we're trying to get accomplished with reading technicals, then you can make these strategies really work for you. Just wait and see what happens. All right, guys, let's get back out to our trade ideas. Let me miss your reply. You said the 920 or the 5813. I like the 9 EMA with RSI. to be really aggressive, but I also like the 920 and the 5813 I really like on short time frames. So if I had to pick one, I probably would just go 9 EMA with RSI confirmation because it gives you a lot of trades. But I think that the 920 or the 5813 are probably superior if you want to be more selective on longer time frames. That's my opinion. All right, guys, if you want to trade, Switch Markets got you covered. Double your deposit with a $100 credit or 100% credit bonus. Here's our trade follow-up. Trump shakes up crypto. This one was from yesterday, the crude oil markets. Relatively straightforward. This was a 75.59 buy. It was pretty good. It really was pretty good. Right here, you can see our 59 buy. We were looking for 29 on the top side, and we were risking about 70 pips. So we were looking to get out of this trade, somewhere right around 89, somewhere in that area. So our stop loss was down here at 74.89, and it was right. It was correct. It was a very good stop loss. I was happy with it. It weathered the storm, and it was a pretty big storm. And since then, we really rallied on today's U.S. New York Open. We went right up there and touched our 29. Now, this is the U.S. oil. You can see it's printing 76.28. That means it's one tick away from hitting the profit target. Now, I got a couple things to say about that. Number one, it's going to depend on your broker. So like this one right here, let's see, what is it? WTI crude oil on TVC. I mean, you could probably go to FXCM or Forex.com, U.S. crude oil CFD. All these prices are going to be different. The idea was to lock in for about 70 pips. So like, let's say we go over to WTI crude oil futures. You'll see we actually did print a 32 today. So that was our high. But for this U.S. oil CFD, you'll notice right there you printed 28. The profit target was 29. Let's go right here to maybe FXCM. What printed on FXCM? 29.9 printed on FXCM. So I'm chalking this thing up as a W just because we nailed it. That's about all I got to say. I mean, right there, here's another vendor right up there. Your high is 76.16. You know, the vendors are all going to be different. So with this U.S. oil contract, and this is sort of the one that we built our trade with, went right up to 28. If, in fact, you ever find yourself in this situation where price rallies from your I guess I could have showed you the charts. When price rallies from your entry point and you go up, let's say you're looking for 70 pips and you go 69 pips, you cannot take a loss. You cannot take a loss on that. Now, where exactly you get out of the market, there's a lot of different ways to do it. You could have a trailing stop on it. You could have had something maybe with symmetry going. You could have just said, hey, listen, now we're within 1 pip of the target. I'm going to move my stop loss to negative 5 pips. You cannot, under any circumstances, and I mean under any circumstances, risk 70 pips. Actually give back 139 pips if this thing moves to the bear to try to get 1 extra pip. I don't care. That's ridiculous. You cannot do that. If you do that, you won't be trading very long at all. You'll go crazy because this inevitably will happen. So when you get close, and I'm talking close, I'm talking within a few pips, you probably need to either think about taking the money off or at least moving your stop loss up so you don't get taken to the cleaners here. That's a sad, sad thing when that happens, when people have victory and they snatch defeat from the clutches of victory. You don't want that. So definitely, if in fact you were in this trade, I fully expect that you took some money out of it. And if you didn't, well, and if you're still long, well, I hope it goes back up and gets the number. We'll still be monitoring this one. This was a long-term 38% level, though. So it could base out, and we could trade up to 77 or 77 and a quarter. I just think with the news cycle and the news breaking out of the White House all the time, you're not going to have a bullish crude oil market. I don't believe that. We may get a big pop-up. We may get a big pop-up to 80 or so, but eventually – probably into spring, you're going to see selling. You're not going to see buying, and we're going to be watching this market relatively closely. So that was a good look at our WTI crude oil play. As far as what else we got cooking right now, I mean, we're actually live with another one. We have the NZD CAD, and the reason why we picked the Kiwi CAD was there was a couple of reasons why. Number one, the Canadian dollar is active. Let me see. Bill, RH Knight, you trading live? Yeah, I put some trades in today for right this minute. Just sort of some real tight scalping stuff that didn't really pan out. But for right this minute, we're just sort of going over the trade ideas. But yeah, I've been trading live all morning. It's been sort of a challenge. I'm not real happy with the performance thus far. The gold market's been chaotic. We're going to cover that in a second. In any case, right here, this was our second trade idea of the day that's gone live. So we hit the U.S. oil, nice profit target there. But right here, Kiwi CAD. We're rallying. Actually, we're coming off a little bit, but we're rallying off of these lows. This low down here came in at about 81.14. Now, we bought 81 and a quarters. So you can see right there on our key numbers. We went ahead and bought 81 and a quarters, which are right up here, 81.26s. So we're down about 5 pips. I'm optimistic that we're going to rotate up and get paid off here, but big picture, we've got to get back up above that 38% level, or this one could be toast. This was a very, very tight trade. We're only shooting for about 30 pips of a payoff here, so if we do take a lump here, I'm not going to be too brokenhearted. And remember, proper leverage, proper money management, 1 to 3% on any given trade. I will allow 5% because I'm kind of a risk taker myself, but boy, you start going over 5% on a given trade, you're really asking for trouble in case you hit a cold streak. Got to be very careful with that. Let me see. RH Knight with Switch Markets. No, I'm in the United States. I'm in Dillon, Montana, and it's warmed up a lot. It's 27 degrees Fahrenheit now, and it was negative 17 2 nights ago. So I'm not with Switch Markets. I'm in the United States. If you're in the U.S., Switch does not service you. If you're an international client, though, you definitely can check out Switch. As far as where you can trade here in the States, Oanda is a good FX broker. And if you're interested in futures trading, we could talk about that as well. Come to the trading room, send me a PM, and I'll get right back to you. So this is sort of what we're looking at here for this Kiwi CAD. Jury's still out, but we do have a solid stop out point. We bought 26s. We're going to stop ourselves out in an aggressive fashion, probably right down here at about 80, 96, something like that. I'm not too worried that we're going to get stopped out anytime soon. If, in fact, we don't get some action back up above our key level, which is about 81.25, if we don't get that during the coming overnight session or maybe this afternoon in the U.S., we're probably going to lose. So that's okay. Everybody loses. Thus far, we haven't been doing much of it, though. So here's a look at the stats for the year. We're going to go ahead and update this one because that crude oil did hit that 1-to-1. So I'm looking at that relatively closely as being a pretty nice winner, and then we've got a 30 going right now. Now, unfortunately, we had another trade idea that just didn't quite pan out for us that I wanted to sort of go over, and it's a big one because we covered every single day, and everybody really is interested in trading. Well, you're all interested in trading gold, and that's great. I trade gold futures. Most of you trade gold spot. And what do you have right here? You have really a big 8 hours, a big bullish 8 hours. And you wonder, why did we rally today on gold? We had a smooth transition of power. A lot of the threats that were made did not develop. It was a very, very secure ceremony yesterday with the Trump inauguration. No real uncertainty. So why is gold up as opposed to down? Well, there's a couple of reasons for it. Number one, the dollar index sort of hovering around zero. But this, in my view, is a technical breakout. Now, a technical breakout is something that occurs when there's a bunch of orders at a certain price point in the market. And that's absolutely imperative that we understand that. You have to know where your key levels are. Your weekly highs, your weekly lows, your daily highs, your daily lows, your monthly highs, your monthly lows. You got to understand those things, because if you understand those, there really isn't much you can't do in the markets. You can do a lot because you can understand where the numbers, what I'm saying is you're going to understand where order flow is going to pick up. And today we had an epic figure that's been on our chart for a long time with gold. Now, you'll go right to our monthly. Typically, these numbers that really drag participation into the market are long-term levels. Long-term levels. So something like this, we knew was going to go eventually. We had a trade idea that was really for a sell-off for the downside of this. I thought that was more of a bigger profit potential, just because we're going to have more hawkish Fed policy. We're also going to have maybe some tariff action. We're also going to have some stability. The political uncertainty, the transition of power is now over. We also believe you've got a ceasefire between Israel and Hamas. You'd also believe that you're going to have probably a resolution. We're already talking about peace summits and things between Russia and Ukraine. And we all see that as being a bearish market driver for gold. But we broke out anyways. Well, it's a technical breakout. So what you have there is you got a December high, which is up there right around 27, 26, 18, and we broke above that, and we're up there significantly now. We were up 26. Now we're printing about 27.44. The big level that you have to watch for gold right now is the all-time highs. The all-time high is 27.90.11. Be very careful if, in fact, you're holding longs, because you're probably going to get some sellers up there. Probably going to get some sellers up there. So if, in fact, you do get those sellers, that could definitely put a lid on your short-term profitability. Brian Barbie, good to see you. Ben Kitchen, snowing on the coast in Mississippi today. Wow. That's amazing. Let me see. RH Knight, I'm in Switzerland. Oh, right on. So you're used to the snow and the cold then. Yeah, it finally warmed up for us today a little bit. It was brutal cold over the weekend. It's supposed to get cold again, but it's just really tough on the body. It's tough to wake up and be alert. And you're always hungry when it's that cold too. Always hungry. In case you break out right above there. So what do I want to do right now if it was to come to a gold trade? Well, I mean, there's a couple of things we can do. Here's a good look at your 4-hour technicals. I like them. It's just going to be really tough for us to build a retracement sequence on that top, something like that, on that top. It's going to be tough. We're going to have to get a pullback, but I would be buying 38% until proven otherwise. As far as your dailies go, your daily, there it is. There's your breakout. Why did that happen? Well, it happened for a lot of reasons. It happened because we broke above that monthly high. That drug a tremendous amount of bidders. It drug a lot of action, and you stopped out a bunch of retail shorts, and then the momentum algorithms piled on the back of the price action. And what happened? Well, you ran price up about $20 over last month's high. We knew that was going to happen. We talked about it all month. If you got that long, great job. I'm not certain how high we go here, though. I think that a big breakout to 3,000 is a bit ambitious. It could happen. I don't think it's going to, though. I really don't. I think you're going to probably find a home up there at 27.50, and then we'll look to grab that sell potentially and grab maybe a position trade. So something to think about there if you're trading gold. Let's see, Euro. Let's go Euro Swissy was a question from earlier. And if there's any other things you guys let me see RH Knight. I wish I could vote for Donald J. Trump, but I'm not American. He got a lot of votes, that's for sure. He got a lot of votes. Let's see. All right, Euro Swissy daily. This is really a fantastic look at a market that's on the move. You got the euro sort of gaining ground against the Swiss franc. There's a lot of angst leaving the market right now, definitely in that area. So the biggest thing you're going to have to deal with this entire year, if you're dealing with, I would say, Eurozone currencies, whether it's the euro, whether it's the Swissy, whether it's Great Britain pound, is going to be trade wars. Tariffs and trade wars. Now, there's already been a few. There's been a lot of saber rattling on the campaign trail about a potential trade war with Germany. That's going to really be a drag on the euro because Germany is the biggest economy there in your eurozone. So when we start talking about trading these eurozone currencies, got to be very aware of what's happening on the trade war front, and I mean very aware. And it's going to be changing relatively quickly. I was back in 2020. I was trading, but I was also working full time as a financial writer, and we were analyzing trade wars all the time. And I can tell you that the impact on the markets is wildly unpredictable. Wildly unpredictable. In any case, nice three-day rally here. You've got sort of a nice break. I would say that potentially there's two ways I would approach this market if I was doing this. Number one, I'd be looking for long-term levels. So if I'm looking for a long-term level, I immediately go to my monthly and I'd say, well, right up there's 2024's high. Does that really help us? No, not really. Let's go to a weekly. We broke above last month's high, so we're relatively bullish here. So my game plan is to try to find a bullish bid. That's what I want. As far as our weekly goes, you can see we sort of broke above that weekly double top right there, and now you're rallying, you're rocking higher. What do I want to do? I want to buy. So how can I buy? Well, did we miss our buy? Looks like it. We had a nice deep pullback today. You see right there from that spike low to that spike high. I would keep a close eye on yesterday's high, but I don't expect a real stiff breakout above that zone. What I would be looking at, though, is to get in on a good pullback. And how do we do that? I would take it right down to a 4-hour, and I'd say, okay, what do I want to do? I want to buy. Spike low, spike high, something like that. Pullback bid, as long as that top is intact, 94.57. We could buy 94.40s. We could do that. We just got to make sure that we wait and we're patient. If we're not patient, we could get hurt bad buying right now. Very dry here. I think we have 0% humidity. I mean, it was one of those where we got some snow, and then after about 12 hours, the snow just evaporated. It was done. It's crazy. In any case, something like this, 94.40 bids are pretty good. This is a good pair, though. Let's sort of put this on our 9 EMA and take a look. You'll see right here what happened. Well, we had an opportunity to get paid off. We didn't take it, and now it looks like we could potentially get stopped on this YM trade. I'll go ahead and let it burn. What I want to do now, though, is we're going to look at that pair we just analyzed, and we're going to use a strategy here. Okay, what do we have? We're in oversold territory, all right, right there. You'd be looking to take the short. Could you have got that short right there? Could this have been a short for you? Potentially. Closed beneath the 9 EMA, and you were in oversold territory or overbought territory, so that would have been the short. You're basically going to get stopped out here. How about with the 920? What happened on the 920? The 920, you'd still be patient. You'd still be waiting. So if I'm thinking about implementing a strategy on these pairs, and it's a 4-hour chart's going to be a swing trading strategy, I'm probably going to be looking at playing crossovers. Now, if we want to go maybe dial this thing down to a 30-minute chart, okay, we're almost in overbought territory here. We could be looking to take a short. Right here, we were in overbought territory. That would have been your sell. That would have been a challenge to take. That would have been tough. Right here, though, maybe. We're getting there. We break above that level there, potentially, wait for the crossover. You could sell that. Something like that could definitely work. As far as a daily, though, do we have anything significant going on the daily here? Not really. You'll notice a lot of these Forex pairs, it's tough to get them outside of that RSI, 70 to the top, 30 to the bottom. Right there, you were in oversold territory, and you were looking to bid, and you probably bid right, well, after the crossover, so right in here somewhere, and then you got stopped out right in here. Choppy. This one's a challenge, guys. I'd be waiting for getting overbought and then look to sell it. That's probably the play there. All right, let's go to a 4-hour here and take one look at 4-hour gold just because I'm curious. Yeah, sort of what I figured. Getting into oversold territory. I'm watching this 920 gold closely on the 4-hour chart. If we fail, right up here right around 27.50, if we do fail, this could be an intermediate term top setting up. Broke above last month's high. That's a technical breakout. All the order flow comes in, drives price. Then what happens? Reversal. Gets back into compression. Sort of what I think is going to happen here, but I don't know. We can't just guess. We got to have our technicals line up as well. All right, let's take a look at this YM trade and see where we're at. Yeah, you're going to go ahead and get stopped out of that thing. Where are we? Yeah, we're out. In any case, good lesson. Well, 1-minute chart. We're not out just yet. There would have been your stop right there, somewhere in there. This is a challenge, guys. If you're holding shorts, good luck. If you're not holding shorts, probably don't open them. All right, everybody, I'm going to sign off for right now. If you have any questions at all, swing by How to Trade and ask me send me a private message. I'll be sure to get back to you in short order. We're going to monitor our trade ideas and check out our performance here. I'm not really too pleased about a lot of what's going on. I think we're seeing some real chaotic price action here with the liquidity providers. Tomorrow will be better, but today's not bad. Tomorrow's a nice, quiet news cycle. We're going to be able to do a lot of different trades tomorrow without worrying about. Well, I mean, I think this is the new norm, guys. You watch headlines, keep one eye on the news feed, because the things that are going to come out of Washington in the next 6 weeks are going to be crazy. Well, they're not going to be crazy, but they're going to be market movers. They're going to be bold moves. I mean, that's what I mean. And Trump has already signed a litany of executive orders. He signed 1,500 pardons for the J6ers last night. He's doing a lot of things. Things are moving fast, and I would expect this first 100 days to be a whirlwind. I really would. So be ready. We got to fall back on our technicals. Don't commit to one side or the other of this market just yet. We've got to wait and see which way it goes, which way things start to line up and go. All right, everybody. Thanks for joining me today. Like I said, any questions at all, cruise by the trading room. Send me a PM. Love to hear from you. Until next time, trade the action well, and we'll talk soon. See ya.